All right, so today we're going to be looking into something pretty huge, these new reciprocal tariffs.
Quotes that the
Yeah.
U.S. has slapped on a bunch of countries.
Yeah, and it's caused some pretty big waves in the markets already, especially coming from China,
Oh, yeah.
with their response and everything. So this is definitely not just, another headline that's going to fade away.
Right.
This is something that could, like, fundamentally change the way trade works.
Absolutely, yeah. Could be a complete game changer.
So we're going to be digging into some recent reports from CBC News and CNBC.
Great sources.
Yeah, to, like, really break this down,
Yeah. Get past the headline.
go beyond just, like, what happened and figure out why it happened, how it happened.
The mechanisms behind it.
Yeah, exactly. And what this could all mean.
For the economy in the long run.
Yeah, down the line for the global economy and for,
Our wallets.
yeah, for all of us, really.
Yeah.
So, hopefully by the end of this, we'll all have a better grasp on what's going on.
Definitely a lot to unpack.
Yeah, for sure. So, let's start with this whole reciprocal tariff thing.
Yeah. The name itself is kind of misleading.
Yeah, I was going to say, because when I hear reciprocal, I think, like, they're doing to us what we're doing to them.
Tit for tat.
Yeah, but that's
Not really what's happening.
not really what's going on here, from what I understand.
No. The U.S. is basing these tariffs mainly on trade deficits.
Yeah,
So the bigger the trade deficit a country has with the U.S.,
the more
the higher the tariffs.
they get hit.
Yeah. And this formula they're using,
It's causing some raised eyebrows.
to say the least.
Mhm.
Yeah, a lot of economists have scratched their heads.
Yeah, I bet. So from what I've gathered, it goes like this. You take the value of a country's exports to the U.S.,
Okay.
you subtract the value of its imports from the U.S.,
Right.
and then you divide that whole thing by the value of its exports to the U.S. again,
Right. So you're looking at the imbalance in trade
compared to...
relative to their exports to us.
Okay, and the EU is a good example of how this works out.
Yeah, their trade deficit with the U.S., when you do that math.
I was looking at that earlier. It comes out to like 39%.
Around there, yeah.
But then the U.S. decided to chop that almost in half.
Down to 20%.
Right. So it's not exactly...
a lot.
Yeah, it's not like they have a 20% tariff, so we're going to hit them with 20%.
No, it's more nuanced than that.
Yeah. Okay, so there's that, and then there's this baseline tariff,
Right. Even countries that have a trade surplus with the U.S.
meaning they sell us more than we sell them.
Exactly like the U.K., for example.
Yeah.
They're still getting hit with a minimum 10% tariff.
Wow. So even if the math works out in their favor...
They're not off the hook.
They're not...
There's a
it's
floor.
a free pass.
Yeah. Okay. So that just goes to show that it's not about matching tariffs.
It's really about
It's about the overall.
the bottom line, who's selling more to whom.
Gotcha. Okay. So this is where the experts are starting to chime in.
Yeah. And they're not holding back.
Like Dmitry Grozobinski.
Yeah. He's a big name in trade consulting.
He didn't mince words.
He called the formula insane.
Yeah, I saw that. And his point
Makes
is,
sense.
yeah, like, just because a country sells more to us
Doesn't automatically mean
doesn't mean they're cheating or...
that they're doing something shady.
Yeah, there could be other reasons.
Exactly. There's a whole bunch of economic factors at play.
In Christian Bravo.
From Western University.
Yeah, he's on the same page. He's saying this formula.
Doesn't seem to be rooted in, like,
Real.
solid economic theory.
Yeah, it's like they're just pro-tariff.
And they're trying to make the numbers fit.
Yeah, instead of, like, actually...
Yeah, looking at the nuances.
Yeah, analyzing the situation.
Exactly.
Okay, so the White House is saying that any trade deficit is basically proof of unfair treatment.
Yeah, that's their justification.
But that's kind of like...
A very simplistic view.
Yeah, global trade is so complex.
It's incredibly intricate.
There's so many different things going on.
Different strengths.
Yeah.
Different resources.
Yeah, like, why do we import so many bananas?
We can't grow them here. Not on a large scale, at least.
It's not like...
It's not because someone's being unfair. It's just the reality of
Yeah.
geography and climate.
Exactly. And then there's the example of Lesotho,
Oh, yeah.
this tiny country,
Getting slammed with a 50% tariff.
because we buy more jeans and diamonds from them than they can buy from us.
It's crazy.
Yeah, it shows how this formula...
Can really backfire.
Yeah, and hurt the little guys.
The smaller economies.
Yeah. So a trade deficit doesn't always mean...
Foul play.
Yeah,
Sometimes it's just
the way things work out.
the natural flow of goods and services.
Right. Okay, so that's the thinking behind the tariffs.
Mhm.
Now, how did they actually come up with the numbers?
That's a whole other story.
Yeah, because at first it seemed like they were just making stuff up.
Right, there was this chart going around with these tariff rates.
And they didn't seem to be based on...
Anything.
Yeah.
It was later revealed that there was this fake tariff rates column
Yeah.
that was basically just the trade deficit divided by exports.
And when people started asking questions,
The White House got defensive.
Yeah.
They tried to deny it at first.
And then they came out with this super complicated formula.
That looked all fancy.
Yeah.
But when you break it down,
It was basically the same thing.
pretty much.
Just dressed up.
With a bunch of Greek letters.
Yeah, they threw in stuff like price elasticity of import demand.
Which basically means how much of the demand for a product changes when the price changes.
Okay, and elasticity of import prices with respect to tariffs.
So how much the price of imports changes when you add a tariff.
Right.
It seems all sophisticated, but because of the values they used for these things.
They kind of canceled each other out.
Exactly.
So it was like a smokescreen.
Trying to hide a very simple calculation.
Yeah, like they were trying to make it look,
More scientific.
yeah, more legitimate.
Yeah, exactly.
Okay, so the formula is all about trade deficits, not really about matching tariffs.
That's the key takeaway.
So what happened when the markets got wind of all this?
Oh, they freaked out.
Yeah.
Global stock markets tanked.
Yeah. The Dow Jones took a pretty big hit.
It was a bad day for investing.
Yeah, you could just feel the panic.
People were worried.
Yeah, because this kind of thing can really mess with global trade.
Absolutely. Throws a wrench in the whole system.
And then China came out with their response.
Oh, yeah. That added fuel to the fire.
Yeah, they weren't messing around.
They announced a 34% tariff on all U.S. product imports
Wow.
starting April 10th.
So they're matching.
Tit for tat this time.
Yeah,
But only because the U.S. started it.
right. So now we have a trade war on our hands.
It's escalating.
And even good news couldn't stop the bleeding.
Yeah, the U.S. jobs report was better than expected.
But the markets kept falling.
People were too scared.
Yeah, they're worried about the long-term consequences.
Makes sense.
And it wasn't just the U.S. markets.
No, European stocks also went down.
And the price of oil dropped, too.
That's a big deal.
Yeah, oil is like a global indicator.
If oil is down, means the world economy is worried.
Yeah. And companies that do a lot of business in China.
They got hit hard.
Yeah, DuPont, their stock plummeted.
And they're facing an antitrust investigation in China now, too.
Oh, wow. So it's like a double whammy.
Yeah, things are not looking good for them.
And GE Healthcare.
A big chunk of their revenue comes from China.
So their stock took a hit, too.
Makes sense.
United Airlines.
All those flights across the Pacific.
Yeah, their stock dropped a bunch, too.
People are probably going to travel less.
Yeah, can ship less goods.
Less demand for flights.
And Boeing.
The aerospace giants.
Yeah, their stock also went down.
They rely on a global supply chain.
Yeah, they get parts from all over the world.
So any disruption is bad news for them.
Yeah, even a little hiccup can mess things up.
It throws off their whole production.
So it's not surprising that their stock took a hit.
And it's not just Boeing. Airbus is in the same boat.
Yeah, they might assemble planes in the U.S., but...
They still need parts from other countries.
So this is affecting the whole industry.
The entire aerospace sector is on edge.
And it wasn't just industrial companies.
Consumer companies felt it too.
Yeah, like Target and Nike.
Their stocks went down.
Which makes sense if prices go up.
People are going to buy less stuff.
Yeah.
Less demand means lower profits.
And one executive from Goldman Sachs.
Lindsay Rosner.
Yeah, she even brought up the S word.
Stagflation?
Yeah, that's a scary thought.
That's a nightmare scenario.
Yeah, high inflation and low growth.
The worst of both worlds.
Yeah, and these tariffs could push us in that direction
It's a real risk.
by making things more expensive.
And slowing down the economy.
Yeah, it's a vicious cycle.
And it wasn't just the big companies that suffered.
Yeah, small cap stocks.
They entered bear market territory.
So it's like a widespread fear.
Everyone's worried.
Yeah, no one knows what's going to happen.
The future is uncertain.
Okay, so we've seen the market reaction now. Let's look at how specific industries are being affected.
Yeah, starting with the auto industry.
Oh yeah, that one's been hit hard.
Stellantis.
They own Chrysler, right?
Yeah, they had to stop production at their plants in Canada and Mexico because of the tariffs on auto imports.
Yeah, the supply chains are so intertwined.
It's all connected.
Yeah, especially with USMCA.
Yeah, it's supposed to make things easier.
But now it's just making things more complicated.
Yeah, the tariffs are throwing a wrench in the works.
And fitted.
Nissan's luxury brand.
Yeah, they went even further.
They stopped production in Mexico altogether.
For certain
Well,
models.
the ones they were sending to the U.S.
So they're just not even going to bother.
It's not worth it with the tariffs.
Yeah, they're making a long-term adjustment.
They're adapting to the new reality,
And luxury goods are going to take a hit, too.
especially from Europe and Switzerland.
Yeah, I read that Swiss watchmakers are particularly vulnerable.
The profit margins are already pretty thin.
So any extra cost.
Could wipe them out.
And we're all going to feel it in the grocery store.
Oh, yeah. Prices are going to go up on all sorts of stuff.
Coffee, bananas.
Toilet paper,
Yeah, all the essentials.
because the countries that produce them now have to pay tariffs.
So that cost gets passed on to us.
It's unavoidable.
Yeah.
It's a law of unintended consequences.
And it's kind of funny how fast food stocks are doing well.
While other restaurants are struggling,
Yeah, it's like people are thinking,
if everything else is getting more expensive,
might as well eat cheap.
yeah, McDonald's that is.
And healthcare equipment companies,
Like GE Healthcare and Siemens Healthineers,
their stocks are down too.
they rely on global supply chains just like the aerospace companies.
So any disruption is bad for them.
Yeah, tariffs mean uncertainty and higher costs,
And American AI companies are feeling the pressure too.
even with some exemptions.
Yeah. CoreWeave and NVIDIA.
Their stocks still fell.
Yeah, it's like a ripple effect.
The whole tech sector is worried.
And dollar stores are a good example of how different sourcing strategies
Can lead to different outcomes.
Yeah, Dollar
They
Trees.
get a lot of their stuff from China,
So they're hurting more than Dollar General
who sources more domestically.
and Pandora, the jewelry company.
They're expecting a big financial hit,
Because of tariffs on imports from Thailand.
where they make most of their jewelry.
So you can see how these tariffs are affecting.
A wide range of industries.
Yeah, it's like a domino effect.
One thing leads to another.
And even hotel construction is being impacted.
Yeah, tariffs on building materials are driving up costs.
So new hotels are going to be more expensive to build.
And with all the economic uncertainty,
It's making investors nervous.
they're hesitant to put money into new projects.
And then there's Canada.
They're matching the U.S. tariffs on cars that don't comply with USMCA.
So it's like a trade war within a trade war.
It's getting messy.
Yeah, for sure. Okay, so we've seen the economic impact. Now let's look at the political side of things.
Yeah, how are the politicians reacting to all this?
Oh, President Trump?
He's putting a positive spin on it.
Yeah, he's saying the tariffs are good for the U.S.
He even compared the U.S. economy to a recovering patient,
Yeah, like the tariffs are the medicine we need.
even though it tastes bad.
Yeah, but a lot of economists disagree.
They're worried about inflation and slower growth.
Yeah, they're saying the tariffs are going to do more harm than good.
It's a classic debate.
Yeah, free trade versus protectionism.
And it's playing out on a global scale.
At first, the White House was saying that the tariffs weren't about negotiation.
Yeah, they were just doing what they thought was best for the U.S.
But then President Trump said he's open to negotiations.
If other countries offer something good,
Yeah, so it's like a mixed message.
they're trying to play it both ways.
Yeah, but Commerce Secretary Lutnick,
He's taking a hard line,
he's saying Trump won't back down.
and exemptions are off the table.
So it sounds like they're digging in.
They're committed to this course of action.
And Vice President Vance.
He's saying that tariffs will eventually lead to lower prices.
Yeah, but not right away.
It's a long-term strategy.
Yeah, but a lot of people are skeptical.
They don't buy it.
Yeah, especially with prices already going up.
It's hard to see how tariffs are going to
Look,
fix
that
that.
other countries are pushing back.
Yeah, French President Macron.
He told French companies to hold off on investing in the U.S.
That's a big deal.
Yeah, it shows how serious this is.
It could lead to a decoupling of the global economy.
Yeah, countries going their separate ways.
And even within the U.S., there's opposition
Yeah, there's a bill in the Senate.
that would require Congress to approve any tariffs that last longer than 60 days.
So they're trying to limit Trump's power.
They don't want him to act unilaterally.
Yeah, it's a checks and balances thing.
The legislative branch pushing back against the executive branch.
And they closed the de minimis exemption for China.
Yeah, that was a loophole that let small shipments in without tariffs.
And a lot of fast fashion retailers were using it,
So now they're going to have to pay up.
which means higher prices for consumers.
It's a lose-lose situation.
And then there's Bill Ackman.
The hedge fund manager.
Yeah, he has a pretty interesting theory.
He thinks Trump is trying to look crazy.
To force other countries to negotiate,
Yeah, it's like a game of chicken.
who's going to blink first?
It's a high-stakes gamble.
And there's also the AI angle.
Yeah, apparently the formula the White House used.
It's similar to what some AI chatbots suggested.
When asked how to fix trade deficits,
So maybe AI is influencing policy now.
that's a scary thought.
Yeah, but it's probably just a coincidence.
Hopefully.
But a fellow at the Cato Institute,
He's worried that the tariffs could hurt American AI leadership.
yeah, by disrupting supply chains and making things more expensive.
It's a valid concern.
Okay, so to recap, the U.S. has imposed these tariffs based on a trade deficit formula.
That a lot of experts think is flawed,
And the markets have reacted negatively.
with stock prices falling all over the world,
And China has retaliated.
with tariffs of their own.
And now we have a trade war on our hands.
And no one knows how it's going to end.
And it's affecting a wide range of industries.
From cars to clothes to coffee.
And it's causing a lot of uncertainty.
And anxiety.
Yeah, no one knows what the future holds.
It's a time of great upheaval.
So the question
What's going to
is,
happen next?
yeah, how will all this reshape global trade?
And what unintended consequences will we see?
Yeah, it's a question we'll all have to grapple with.
In the months and years to come,
That's all the time we have for today.
hit subscribe and turn on notifications.
Thanks for listening.
See you next time.